Hey folks, welcome back to Polar Byte, your front line for crypto intel with that no BS Canadian perspective, where we unpack the wild world of digital assets and laser in on how it ripples right into our backyard, from TSX ETF delays to those FinTrack watches that keep us one step ahead of the curve. Quick hello before we gear up, drop a comment letting me know where you're joining from, right here in the Great White North, down south in the States, or somewhere across the pond. It's October 3, 2025, and holy Uptober. Batman, crypto's not just surviving a US government shutdown, it's thriving like it owns the place. But straight up, this is my take on the headlines and data, not financial advice, so sift through it yourself, consult a pro if it vibes with your stack, and only risk what won't wreck your weekend. All right? Let's roll.
Starting with the big picture that's got everyone glued, the crypto market's flexing hard at a whopping 4.31 trillion cap, up a crisp 2.1% in the last 24 hours alone, with trading volume churning at 221 billion. That's the kind of green pulse that screams institutions piling in despite the chaos south of the border. Bitcoin's dominating at 56.9%, trading around 123K after a steady nudge, while Ethereum's right there at 12.7% dominance and $4,510. Solid. But the real fireworks are in those ecosystem plays like Polkadot and XRP Ledger, lighting up the gainers board with double-digit pops, including standouts like Double Zero, surging 27%. From my lens, this isn't panic selling, it's calculated accumulation, especially as BTC's hash rate hits all-time highs and stablecoins cross fresh milestones. October is living up to the hype, with Bitcoin blasting past 122 grand this week, defying that 2018 shutdown dip, and analysts eyeing a seventh straight green month, fueled by Fed cut bets at 99% odds. For you Canucks, it's a reminder our market's intertwined. If US liquidity loosens, our Purpose and Fidelity ETFs could see fresh inflows. But watch for CAD volatility if the shutdown drags.
Now, the elephant in the room, this US government shutdown kicking off Wednesday after Congress fumbled a funding bill, it's freezing federal ops, and the SEC's right in the crosshairs, furloughing non-essential staff and running on skeleton crews for emergency fraud busts only. No routine reviews, no non-urgent rulemaking, and zilch on ongoing litigation unless it's do or die, meaning crypto firms catching heat might get a breather, but everyday filings? Dead in the water. Picture this: Solana, Litecoin, and XRP ETF apps, all queued from mid-October nods, now iced indefinitely. Experts like Bloomberg's Eric Balchunas are calling it a rain delay. But with generic listing standards already approved, we could see a flood of launches the second funding flows back. My 2 cents? It's a short-term gut punch for altcoin momentum. Delays breed doubt, potentially capping those ETF-driven pumps we've seen with BTC. But long-term, it underscores crypto's resilience as a hedge against fiat drama, with BTC outperforming stocks amid the standstill. For you Canucks, it's a reminder our market's intertwined. If US liquidity loosens, our Purpose and Fidelity ETFs could see fresh inflows, but watch for CAD volatility if the shutdown drags. On a brighter flip, Samsung is dropping a bombshell for 75 million Galaxy users stateside. Seamless Coinbase integration into Samsung Wallet, unlocking zero-fee trading via Coinbase One, boosted staking rewards, and even crypto-tied payments right alongside your loyalty cards. No app swaps needed. It's Coinbase's biggest consumer push yet, starting US only, but eyeing global rollout soon. And Sean Agarwal from Coinbase nailed it. This is about onboarding billions where they live, on their phones. For us in Canada, it's a tease. Imagine that level of mainstream plug-in here, supercharging our adoption without the KYC grind. But it'll pressure local players like Wealthsimple to amp up their crypto game. Globally, the vibes are mixed. Brazil's energy giants are wooing Bitcoin miners to guzzle their 70% surplus power, smart grid hack turning waste into hash, unlike New York's fresh tax bill that could boot ops out with 5 cent per kWh hits on big players, and the Europe's cooling on private stables like Tether, while 9 banks plot a Europeg rival and the ECB gears up for a digital euro by 2029. Classic central bank chess. My view on the shutdown: it's bullish camouflage for BTC as the ultimate screw-your-fiat asset. Market shrugging it off shows maturity, but alts and DeFi could wobble on delayed liquidity. Watch for jobs hop data hold up spiking vol. If it bleeds past a week, sentiment sours, but history says crypto bounces harder. For Canada, we're buffered. Our regs are steady, no shutdown sync-up, but US ETF stalls could slow cross-border flows into our funds, nudging more folks towards self-custody or our homegrown DEXs. Keep an eye on Bank of Canada echoes. If Powell cuts, Macklem might follow. Juicing risk plays here too. That's the Pulse Polar Byte crew. Shutdown or not, crypto's marching on, so gear up, stay vigilant on those macro ripples, and thrive through the noise. If you're easing in compliance style, Wealth Simple's your low-drama entry. Snag BTC ETFs in your TFSA with 0.40% fees and 50 to 150 bonuses on that first $500 deposit. Dead easy, all Canadian. Hit subscribe for our North-exclusive takes like next week's tax trap teardown. Comment your shutdown hot take below. And yeah, where are you tuning in from? Stay ahead, stay biteful. See ya.